Looking back over the summer months, in June, we saw what we thought looked like a recovery. Sales were up, the market was moving. A lot of people were asking, is this it? Is this the turnaround that everybody's been looking for? Well, definitely not. July, the numbers are in, and the answer to that question is no, that was not a recovery. July 2026 just came in as one of the slowest real estate markets Metro Vancouver has seen in modern history. Not just slow for 2026, slow for any measure over the last decade. In today's video, I'm going to walk you through exactly what happened, the sales, the inventory, and the prices with graphs from Greater Vancouver Realtors data. Because the numbers this month tell a pretty important story. So let's get into it. Let's start with the sales. And I want to give you some context here before I throw the numbers at you. Over the last 10 years, the only July that came in slower than 2026 was back in 2022. And this was slow for a very specific reason. That's when the Bank of Canada started raising interest rates aggressively, one of the fastest rate hiking cycles in Canadian history. So of course the market froze. That was one of the most dramatic shocks in housing market we have seen in decades. This July, there was no shock like that. No surprise rate hike, no major policy change overnight. Just a market that is continuing to slow down on its own. And here's what makes that significant. July 2026 is actually slower than July 2025. If you can remember what July of last year looked like, it was one of the slowest real estate markets we've seen in over 20 years, and 2026 is coming out worse. That's not a small thing. So now let's talk about some new listings. And here's actually a bit of good news, or at least looks like good news on the surface. New listings in July came in lower than July 2025 and lower than July 2024. Fewer sellers putting their properties on the market. So that might seem like a positive, right? Less supply, more balance. But here's my theory on what's happening. And I don't think it's a good sign at all. Prices have dropped so much over the last year or so. And I think a lot of sellers in this market simply can't afford to sell and make the move. They bought at a higher price, they have a mortgage that reflects a higher price, and if they sold today, they would either break even or, let's face it, they're going to take a loss. So they're not listing, they're waiting it out. They're waiting for the market to come back to them, and that might not happen for years. I don't blame them, but this is what a frozen market looks like. Now let's look at total inventory. Even with fewer new listings, total inventory is still historically high. It's not quite as bad as July 2025. There's slightly less sitting on the market right now in August. But if you zoom out and look at the last 10 years, we are still well above average for this time of year. Which brings me to the most important graph of the month, months of inventory. For anyone that hasn't seen me explain this before, months of inventory tells you how long it would take to sell everything currently on the market at the current pace of sales if nothing came new to market. Under 3 months with this number, it's a seller's market. Prices go up. Over 5 to 6 months, buyer's market. Prices come down. Right now, we are sitting at the top range for the last decade. In July specifically, the months of inventory reading is among the worst we've seen in over 20 years. And in July specifically, the months of inventory reading was amongst the worst we've seen in over 20 years. Here's a comparison that really puts this into perspective. July 22, remember the month when rates started spiking, actually had lower sales than today, but also had way less inventory. So even that terrible July 2022, the market was healthier overall than what we're seeing right now. So let that sink in. Now let's talk about what all of this is doing to prices, because that seems to be what most sellers and buyers focus on, because this is where it really hits home. Let's start with the detached house market. Benchmark price for a detached home in Greater Vancouver right now is sitting close to where it was in July 2021. 5 years of price gains pretty much erased. Now, detached housing has actually held up better than some other segments this year, and we're going to see why in a minute when I break down by property type. But even in the most resilient segment, the drop from the peak in 2022 has been significant. And the drop between 2025 and 2026 specifically has been very steep in comparison in this cycle. Townhomes are a similar story, but actually the most resilient of the three. Prices are sitting somewhere between 2021 and 2022 levels, which is interesting because townhomes are actually really flat from 2022 to 2025. A lot of people during the pandemic tried to upsize from a townhome into a detached home, have their own piece of their own property and enjoy their yard space. There was a small bump in 2024, but then prices started falling again in 2025. The good news for townhome owners is that they've held their value better than detached and much better than condos. Condos is really the segment that's been hit the most. My theory on townhomes attract a specific buyer, usually families who need a bit more space, Not a lot of alternatives at that price point. The demand stays more stable. Like if you're in a 2-bed, 2-bath condo and you need some more space, jumping up into a townhome is a huge lifestyle change where you can possibly get your own garage and your own backyard. It is realistically one of the best lifestyle changes there is. Being able to come home from work or whatever else, not go into a parkade, not go into an elevator, just being able to drive up to your driveway, park your vehicle, go inside your own home. I'm going to share a chart that really gets my attention every month. Benchmark condo prices in Greater Vancouver right now is just under $690,000. You know what the benchmark was for condos in 2018? Just over $700,000. In 8 years, prices just haven't gone flat. They've actually gone backwards. And if you factor in inflation, rising strata fees, insurance costs, interest costs, the real dollar loss for a lot of condo owners is pretty significant. This is not just a correction. For the condo market, this is a full reset. Now let's zoom into 2026 specifically and look at how July compares to the rest of the year. Since January, every month was busier than the one before. February beat January, March beat February, April beat March, May beat April, June beat May. There's a sense of some momentum building throughout the year, and then July came in slower than June. For the first time, that's happened all year. Now, sales slowing in July is completely unusual. The summer market trends to be a bit softer, but inventory also dropped slightly, which is a bit of a silver lining. For new listings, some properties came off market, fewer buyers, fewer sellers. The market basically paused. Just a reminder, this is the total market in the Greater Vancouver area, so it's not specific to hyper-localized markets. The last couple months for me have been the busiest 2 months of the year, but you can ask 100 realtors how they're doing right now, and every single person that you ask is going to be a bit of a different story. Now, when we look at months of inventory between 2026 and 2025, month by month since January 2026 was running worse than 2025 for most of the year. Then June happened, which was actually better this year than last. That was a big story last month, and people were starting to wonder, are we turning the corner? And now July flipped it completely back, and August is looking very similar. So July 2026 worse than July 2025, and that market was already a rough market. So the graphs that were starting to converge, they're actually diverging again. Let's look at sales by property type and see what's actually driving this. Detached housing since 2023, sales have been pretty flat, grinding sideways and downwards. And for most of this year in 2026, detached sales were actually running ahead of 2025. May and June of this year were stronger than the same months last year, but July reversed that. July 2026 detached sales came in weaker than July 2025. So even that one segment was showing some resilience this year, just took a step backwards. Townhomes are a similar story. Sales have been flat since basically 2023. But here's the thing about townhomes that I think get overlooked. The townhome market is connected to the condo market in a very direct way. A lot of townhome buyers are condo owners who are looking to upsize and make that lifestyle change that I was talking about. They need to sell their condo first. And right now, the condo market is the worst it's been in over a decade. So those move-up buyers are a little bit stuck unless they price super aggressive. So they can't sell their condo, so they can't buy the townhome. It creates a chain reaction that holds back townhome sales even when demand is there. Fix the condo market and townhome sales get better almost immediately. Speaking of condos, the sales graph here shows one that stands out the most to me. This is the weakest condo market we've seen in over 10 years, and it's not even close. Worse than 2022, worse than the pandemic, worse than anything we've seen in well over 10 years. Every single month this year, except for June, condo sales have come in lower than last year, and last year was brutal. In July, the gap between this year and last year actually widened. The two lines in that graph are moving apart. This is not a market that is finding its floor. It's still going down. Month by month in comparison, 2026 and 2025. Back to the detached market for housing, prices were holding fairly steady for a few months. And then in July, prices dropped sharply. From June to July, there was a significant dip. It's one of those moments on the graph where it almost looks like something cracked. Not a lot of people are talking about this, but that July drop for detached housing prices is significant, especially because this segment has been so resilient all year. Townhome, same pattern, held flat through most of the year, then a sharp drop in July. Condos are a different story entirely. Prices have been flat. They've been declining steadily since March and the last few years. Month over month, a slow bleed watching prices decline, and it continued in July. Of the three segments, condos are clearly doing the worst, and the trend is not showing any signs of reversing based on simple supply and demand. So what does all this mean heading into fall? Here's where I'm at. June looked like a recovery. July said it wasn't. The fall market, which is August, September, October, is going to tell us a lot about where the market's headed next year. Historically, the fall is more of an active market than summer. More listings, more buyers, more transactions. A lot of buyers and sellers take the summer completely off. And then we usually see a spike of inventory middle September once people are back from their vacations and settle into their routines again. Now, if we see this seasonal pickup this year and the numbers still come in weak, that's a much more concerning signal than a soft July. On the other hand, if fall brings some genuine momentum into the market, sales pick up, inventory starts to decline, then maybe June was really the beginning of something and July was just some summer noise. But I'm not going to pretend to know which way it goes. But what I can tell you right now is that the data that we're seeing does not support an argument that we're in any sort of a recovery, not even close. I'll be back in a few weeks to go over the August numbers, and I'll keep watching this closely. If you're not subscribed yet, hit subscribe so you don't miss the next update when they come out. If you found this video useful, give it a thumbs up, drop a comment. It genuinely helps this channel reach more people. And if you're in Greater Vancouver, whether you're thinking about buying or selling or just want to understand what this market means for your specific situation, please reach out. My contact info is below. I'm Blake Chancey with Real Broker. Appreciate you all. See you on the next one.